Welcome back to the Global Business Report on Rise News. MSCI Incorporated, a provider of critical decision support tools and services for the global investment community, announced in the last week of June the results of its 2022 market classification review. One of the outcomes of that review was the launch of a consultation on a proposal for a potential reclassification of the MSCI Nigeria Index from frontier markets to standalone markets. So what does that mean, and what are the implications for Nigerian equities? Joining us to discuss further is Muyiwa Oni, Regional Head, Equity Research, West Africa, Bank Group Securities. Muyiwa, good morning to you. Thank you so much for joining us. Great to have you on the show.
Good morning, Rostas. Thanks for having me.
Great stuff. You've written a report, if I can take a look at the cover of that report, where you talked about this particular reclassification. So help us out. Yes, there it is. So, what does this mean exactly, and what's the implication?
Yes, so placing Nigeria on a standalone means that Nigeria won't be. So it's almost like you're taking Nigeria out of that index. Currently, Nigerian equities account for 4.7% of that MSCI Frontier Index. Okay. There are about nine Nigerian stocks there. So the most capitalized and the most liquid of the names. And typically you'd have some large fund managers, quite a number of global fund managers that will typically track some of these index funds, either the EM, emerging market funds, or the frontier market funds. And so what it will mean is for those funds that track the index, they would have to take out the Nigerian stocks out of their index. So ultimately what it means is that they'll be selling out of the Nigerian equity market. And so ultimately for now you'd see little interest from those investors from that point of view. And I would say the main reason why is really more market access. So because of the FX liquidity challenges we've had for some time, foreign investors that have sold stocks haven't been able to exit the markets. We've had situations whereby there's been backlog taking foreign investors months to exit the market. And because of that as well, a number of them have stayed out of the market considerably.
Wow. So as far as the impact on the equities market, what's that? You're going to see sell pressure on stocks? What's the impact?
Yeah, so one would argue that maybe the sell pressure continues. And so you might argue that in the short term, you really won't see too much of a difference because we've seen this sell pressure for some time. I would say since, particularly from foreign portfolio investors, since 2020. So 2020, foreign portfolio investors exited, or there was a net outflow of over 260 billion naira. Last year, it was lower, about 40 billion naira.
Yeah, we actually have those stats up.
This year, about 9 billion net exit. And so you've had situations whereby they've continued to reduce their exposure to Nigeria. In the past, they accounted for about 18% of Nigerian equities. So I think as close to 2018, now it's just about 6%. So foreign portfolio investors own just about 6% of Nigerian equities. In terms of value, it's now down to about $4 billion. So even though in reality, it's not necessary that all that $4 billion track the funds, but it clearly would reduce that pressure as well. So if one looks at market participation, in the past, foreign investors accounted for about 49% of market liquidity, so turnover in the market. Now it's down to just about 18%. So foreign and domestic investors have been dominating for some time now.
And so, do you attribute it all to? And let's put those stats back up because you just mentioned the participation in the market, which has dwindled down. Do you put that all to? It's all FX illiquidity. Is that the main driver here?
So I won't say main driver. One can say it's so. Initially, it was really more because of COVID. So global fund managers were literally exiting emerging market and frontier market. So because of COVID and uncertainties, most investors were looking for safe havens. So you saw that pressure not just in Nigeria, but across quite a number of frontier and EM markets. And I think by later 2020, most of that pressure had slowed down, but the FX the FX constraints or the FX management or the management of our own FX market really didn't change since that time. And so we've had situations whereby interest has reduced considerably. So in the past, the I&E FX was really more dominated by foreign portfolio investors. So they used to provide liquidity into that market, and
Right.
there was limited intervention from the central bank. But right now, because all that liquidity has dried up, you've had the situation whereby the central bank has had to supply liquidity with our reserves, and so I think so. It's been way more difficult than in the past.
Okay, so your research shows that if we look at as far as domestic investors, the participation, I think it's 87% now to like 13 for versus foreign investors. Some say that's good that domestic investors are carrying the load. What do you make of that, of the dynamic, since it's more domestic investors now participating?
Yeah, so I think I'm partly aligned with you, and I think the part of the reasons why that is the case as well is if I think about our interactions with domestic institutional investors in the past, there was always that view that most of them would rather track what foreign portfolio investors are doing. And interestingly, whenever we talk to the foreign investors as well, they always want to know what the large institutional domestic investors are doing, because their own view is these guys are closer to the ground. They should know these companies more.
And then the domestic ones are also tracking for...
because they feel they might have some models that might make them track things a bit more differently. But I think what is positive with the current situation is that the domestic investors don't have a choice but to drive the market. And one might argue that maybe that's also why over the past 2 years you've seen positive performance in the equity market. So far this year, the market is still up 21%. So in spite of the exits you're seeing from foreign portfolio investors, and I think also maybe because their exposure is also limited to a number of companies, and I think for those companies, their performance have dampened considerably as well. So the likes of GT Bank, where you've seen exposure or ownership reduce from 33% to about 19% now, and the share price performance has also been weakened as well. But ultimately, what you found as well is that the domestic investors have had to carry the market. So you might say that maybe a silver lining in this whole interesting situation.
Very interesting. Another thing that's very interesting that your report highlighted, the interest in dually listed stocks, particularly Seplat and Airtel Africa. Can you talk to us about the strategy behind that?
Yeah, so because those two stocks are listed in multiple exchanges, so in the past we still have a few listed in more than one exchange. So EcoBank as well is listed in Nigeria, Ghana, and the BRVM. Owando used to be listed in the Johannesburg Stock Exchange in the past. Airtel Africa and Seplat are listed in the Nigerian Stock Exchange and on the London Stock Exchange as well. And because they are dual listed, you have situations whereby foreign investors can either sell out in Nigeria or buy in Nigeria and exit
over in London,
in the UK, or buy in the UK and then come into Nigeria. And because of the challenges with the queue and getting FX out, you found more foreign portfolio investors use that as an exit strategy. And so you've seen that stock price bid up considerably. I suppose also because the domestic investors that own these shares see that strong interest, and they as well will bid that stock price up as well. And so if one looks at the implied FX rate, because this stock is listed in Nigeria and in the UK, if you look at the conversion rate, you find that the implied currency rate is over 1,000 currently.
1,000 naira per.
Which is far more than the parallel market. And I suppose for them it's because that's where they have access, right?
Right. So you just want to get out.
So it's easier to get out through there. And I suppose also because of the demand or the demand pressure and the advantage the domestic investors have as well, they are willing to beat up the price as much as possible because if they can see the desperation from these foreign portfolio investors as well. So you might say maybe that just shows fire sale value, but might not necessarily mean that that's really the
fundamental value of stock.
Currently,
Very, very interesting. Okay, you mentioned the market is up year to date 21%. What's your valuation as far as the NGX is concerned?
So it's still fairly valued if you look at trailing PE. So trailing PE is still around...
view as price to earnings.
Yeah, price to earnings ratio. So,
okay.
And that, so current price to earnings ratio around about 10 times, just over 10 times. So it's still in line with the Frontier Index, slightly more attractive than the EM, Emerging Markets Index.
Yeah.
And then also a bit more expensive than the Africa Index, which is Africa XSA. I think that's about just slightly over eight times now. But if one looks forward, I suppose it's really more because of the growth one is seeing or expecting from the Nigerian equities as well. It's actually trading at just around 2 times, which I found quite interesting as well. Because when I was looking through the numbers on Bloomberg, I kept on checking it.
Is this right?
That looks extremely cheap. And I think maybe what's also more interesting is the dividend yield opportunity as well is over 20%. And I suppose if you look at some...
That's higher than inflation.
Yeah, so if you look at some blue chip names, the likes of GT and Co. are already at dividend yield. So if you look at current dividend, around 14+%. Wow. And so just showing that there's clearly still value in the market. One might argue that there are risks as well. So if you look at the economy and there's challenges with inflation, challenges on the security side as well, which one might argue that those might be some dark clouds on outlook and some downside risk.
What about the election? Do you put any weight as far as the headwinds? You've mentioned inflation, you've mentioned all the other bit. Does the election pose any risk? But
I'd say I think less. I think the risks are less, and I think also if one thinks that the main actors or players in the equity market now are more domestic, they understand the situation as well and won't be as concerned as foreign investors thinking, will elections actually happen?
Right.
Will there be transfer of power? We think elections should go smoothly. If you think about the previous cycles, yes, you continue to see improvements in the laws, in how the electoral process continues to refine. One might argue that there are clearly room for improvement, and I suppose we'll get to that point at some point. And I think there's also that view that if one looks at the candidates as well, there's clearly, for most of the candidates, particularly the major candidates, some understanding of the business environment.
Yeah.
And one could see more positive business-related policies as well.
So that translates into less fear or risk as far as the elections are concerned.
Yeah.
Perfect. Got about a minute to go. Can you just quickly talk? I mean, do you like any sectors, finance, consumer goods, industrials?
So if one looks at valuation, from a valuation point of view, the banks look extremely attractive or cheap right now. They've underperformed. I suppose foreign investors' selling pressure has kept the sector lower. Oil and gas has overperformed, has performed quite strongly. I won't say overperformed, but if one looks at oil price trends, one looks at demand for seplat, for example, the sector, the index or the sector is up about 60%. The banks are still negative. As at June, the banks are negative. So the banking sector clearly does stand out in terms of opportunity from a cash flow dividend perspective, and even upside once we go past these headwinds.
Fantastic stuff. Muyiwa Oni, Regional Head, West Africa, Standard Bank Group Securities. Always a pleasure having you on the show. Talk stock. We really appreciate your time. Thank you so much.